Okay, let me start with the first question. And I think I have spent personally over 10 years doing that job. How do regulators find a way to build a startup ecosystem? Traditionally, regulators' job is not to indulge in this space, because if you think of central banks, regulators, they have a different mandate. But over 10 or last decade, I would say, and with Alfred today, before this, I was talking to him, and he said that because of the emerging market demand, it has changed the nature of how regulators and central bank thinks about startups. Because startups are going to be the defining elements of the future of financial sector. So with that context, let me start asking this question to my eminent panelist. Let me start with Governor Soraya. What did you do differently so that you are now going to help all the startups, not only in Rwanda, but beyond this, to make them successful?
Thank you very much, Sopnendu, or Sop. I think, one, I wanted to start by thanking you for not asking me another question, because that's your habit. And probably as we've navigated this new world of fintech, I think it's important probably to go back to central banks, maybe pre-fintech era, and then go to what are central banks doing, and in particular the National Bank of Rwanda. I think, as you rightly said, if this fintech forum had been organized in 2015, National Bank of Rwanda would not be here. For two main reasons. One, we would wonder what we're doing in a forum for innovators. But second, probably we would not be able to even articulate what we're doing to foster an environment where startups, and in our case, really financial technologies startup, how we're facilitating them to set up and be able to start deploying their services and products. But we had to undergo a certain evolution and change. First, in our structure, by setting up a financial sector development and inclusion department, completely separate from financial stability or supervisory teams, and reporting directly to the governor. And that was a signal that we were serious about financial sector innovation, but that has to go hand in hand with inclusion. And in 2022, we started our regulatory sandbox. And then one would ask, but what's really a regulatory sandbox? It's not a sandbox with sand and people come and play in it, but it's really an analogy on, we know that for fintechs, it was difficult for them, one, to understand why we want to regulate them. Why are we insisting that they come to the central bank to ask for a license? Because for them, they want to focus on building their business, start offering their services, and make money, and probably scale and become bigger companies. But in the space of the financial services, because you are, as an innovator, as a fintech owner, or founder, you're going to be dealing with other people's money, other people's savings. Either you're taking their deposits or facilitating payments from, Haocong to myself or to Alfred. So it's not your money in essence. So whatever happens with that money in between is actually your responsibility, but you have to have someone policing how it's done and making sure that people are not losing their savings. So in the sandbox, what we do is we accept innovators that come to the central bank really wanting to test their services, but not yet sure whether they should apply for a certain type of license. We give them 12 months to test their product and services, while they also navigate the licensing process. Do they want to become, let's say, a remittance company? Is it an aggregator? And what does that mean in terms of capital they need to put up, the governance they need to put up? And sometimes I think it's best for them to have those 12 months where you have a sort of light I would say, regulatory framework when you start testing and see whether your solution works. And we've really had successful cases, 2 companies now that have graduated or are almost graduating. One is called RTN that provides aggregation for banking and mobile network operators agents. And the second one, called Keiko, offers actually reconciliation, accounting record keeping solutions to SMEs, and then also plays the roles of payment aggregator. So we can see that one, of course, we're also learning as the National Bank of Rwanda on how to accompany best those fintechs. But second, it was also to look at the people that we hire as central bank. I really liked what David said, as in what we need to do is really listen. Do we understand what these founders are going through as challenges, or am I going to give them theories of how to start a business, how to comply with regulatory framework without really understanding where they're coming from? So our team now is sort of a young team with tech-savvy people, some having been entrepreneurs or almost entrepreneurs, but also business analysts who can speak the language of these founders. So I think there's probably, to sum it up, one, an open mindset to say, central bank, we don't know it all, but we need to really be supportive for these financial or fintechs or startups because they're solving solutions that the traditional financial service providers haven't done. Second, having people who can speak their language, but also us learning to communicate better to that audience and to the young population that we have. So I think it's an ongoing journey, but this is what we have done to sort of stir up and promote fintechs in our country. Thank you.
Thank you, Governor. Thank you. I think we should give a big round of applause to Governor, because Rwanda has truly, the Central Bank of Rwanda has truly done something unique in this market. Given you have flight to catch, I hope we can get it through within the next half an hour. I think, by the way, Rwanda is very efficient to get you to the airport, so you should not worry about that. So let me ask you, Haocong, that given the, and I'll paraphrase it. I met a very famous unicorn founder in Europe many years back. He was still not a unicorn, and is almost Europe's #1 fintech success. And asked the founder, come to Asia and do your product in Asian market. And his response was that you guys have really taken away all the arbitrage opportunity on policy, infrastructure. I have no way to make money out of it. Essentially what he said me, if you have a strong regulatory framework and a strong infrastructure, I can't arbitrage for my business, and I'd rather go to US. That's what he said. So the context of the question is that why should regulators intervene in market where the startups' primary goal perhaps was to arbitrage the market for a better economic return? So where does regulators and startup come in this equation? Okay. I didn't change the question. I just gave it a different context.
Yes, and then you go off script. So let me reflect a little bit. First of all, for those of you who don't know about the CGAP, we're a global think tank, mostly focused on financial inclusion, but we both do the last mile financial inclusion and many of the frontier issues like innovation. So where we come, talking about regulatory roles from in terms of promoting innovation, startups, fintechs, I think the regulator naturally needs to follow the market development. We've seen market evolving over the past, some people will say past 15 years, but it's mostly past 7, 8 years. That's some of the dramatic innovations happening in the market. Now, what I mean by that, if you look at financial services, how things have changed, we see financial services becoming increasingly modularized, and also more and more embedded in real and commercial activities. That has certain implications for financial institutions, right? And both on the regulatory, we call it the regulatory, the back end, and then the consumer-facing front end, right, which may not be regulated, right? Some of the fintech companies may not have a regulatory license. So if we look at the business model, so we talk about the innovation in business model, product and services, and the technology. When we look at the business model, basically you see this great unbundling, right? You see the different layers of financial services, from balance sheet to product to the customer relationship to distribution channel. And there's many players within this bundle of service, right? And then to the regulators, this raises the question of, whether the legal and the regulatory framework can keep up with the innovation. And then if you go a step further, like some of the more progressive jurisdictions and the central bankers like Rwanda, Singapore, you ask the question, how can regulatory regulation and the supervision promote innovation? So in that sense, you look at licensing framework, whether your licensing framework is flexible enough, what type of activities is allowed. You want to have diverse players in the system, and then you want to distinguish what kind of services is financial services, and what are some of the other activities which are supporting activities, which may not necessarily need a license, right? Yes. So you basically have that function as a distribution channel, either for cost efficiency, or as that facing customer to make a customer experience more smooth, right? So that's number one. And number two is not only written in regulation, it's also about the procedure, right? If you ask a fintech, very often they complain, they say, I come to the regulators, they don't really understand the technology underneath my innovation, and then they will ask, sit on it for 6 or 12 months, right? Sure. Business already. They simply don't have that runway to last that long, right? If they get in the licensing process. And then you also have, we had this debate about whether it's institution-based or activity-based, right? I think in a lot of countries, activity-based supervision regulation is talked per se, right? It's not in essence. So in essence, it's basically to say whatever your legal basis is. A lot of countries, you talk about Singapore, you have activity-based licensing, right? You prescribe what the criteria meet. So you give a broad license, but with the detailed prescription in terms of permissible activities, right? That's one way to do it. In a lot of other countries, the legal basis is institutional-based. But then in that framework, you can also allow certain flexibility, right, for you to not put on a straight jacket on fintechs. And then there's obviously also compliance issue, who's responsible. There's also in the digital, which CGAP has done a lot of work on, is the digital consumer risk, right? How the conduct supervision will evolve in that context. So I think absolutely, you're looking more for more virtuous dynamic, right, between the market and the regulation. So I will stop here.
Sorry. Governor spoke about regulatory sandbox, which I think I framed it as a policy making through experimentation. You framed it nicely, saying that regulators responded by moving from entity-based regulation to activity-based regulation, which is, to me, one of the biggest innovation regulators could bring to this space to allow startups to grow, is to look at activity rather than entity. Alfred, now given both of them have expressed a very positive forward-looking trend on this space, you are seeing this whole market from how many 60 countries you're operating?
85.
85 countries. From your vantage point, you seem to be more optimistic that regulators will be spending more time with the startups and pushing this discussion forward. Give your sense, optimism and some skepticism.
Well, thank you very much. Well, we are not optimists by profession, but actually more by conviction, I would think. And because of what we have seen over the past decade particularly, let me first say I'm very happy to be here. Thanks very much for the invitation. And I must share with you that it comes with a melancholic feeling when I enter this room, because we have had our global policy forum where all the 85 countries meet annually here in Kigali in 2019. So it's really nice to be back, and it brings back a lot of memories. But one of the big memories actually links directly into this topic. Because here in Kigali in 2019, the AFI members, mostly central banks from all over the world, emerging economies obviously, actually issued a statement which was called the Kigali Statement, which came with a willingness, a commitment to leave no one behind through financial inclusion. And of course, we were looking at many of the groups that you're all aware of, like people with disabilities. We're talking about the elderly, the younger ones, but also the SMEs, younger people, the youth, but also, of course, women and so forth. And I think this statement is a commitment which is of global importance. And it also reflects the change of thinking of regulators over the past decade. Now, having said that, the regulator's mindset has clearly evolved and changed over this time. And one thing I wanted to point out, and I think Nick yesterday from the center actually, in his very brief remarks said something about the 3 items why we are here. So we always ask our questions, why are we doing this? So the question that was brought up or was answered by this was, he talked about inclusion, he talked about sustainability, and he talked about impact. And this is exactly what we see in the network which is driving the regulatory approaches these days, with the understanding that all what we are doing in this is not only helping the 3 that I have just mentioned, but also a cornerstone of actually achieving and maintaining stability. So the mandate question has changed. Is no longer the narrow mandate of central banks that we have seen before. We are not saying there's a new mandate, but we do see regulators actually using the space that they have within the given mandate, and that brings us, of course, to financial inclusion. Now, what we have...
Sorry, Alfred, we have made a very good point. I don't want to lose here.
Yeah.
You use the word mandate.
Yes.
How critical mandate is for central bankers to have in the main mandate so that they can help this ecosystem to grow, or the sector to develop. Because mandate is a choice, they may have a secondary choice, but not core mandate. Inflation targets, very core to central bankers.
Sure.
So how important mandate is for sectorial development?
Well, I mean, just a few words on this. We have had a discussion, and actually Soraya is really part of this discussion as well. There is, of course, the temptation to say we expand on the mandate, but I think most of the regulators on the AFI network prefer to maintain the network as is and not to broaden it officially through changing of the statutes or all that, because that might bring us political interference, which is what most of our members do not want, because they see themselves as independent regulators. So we can do a lot within the given mandate. I think that's the basic understanding. But what is important here is that this rapid emergence of fintech and digital startups, some of the examples that you have discussed here, that really has prompted regulators' transition from being just stewards alone to facilitators and enablers of innovation, and also change makers. And of course, this brings us to the question of mindset, because it actually requires an adaptive mindset. And this is what we do see in the network, that this has happened. And you can see it actually through, when you would ask me the question, I don't know whether we have the time, but when you would ask me the question, what can we expect from central banks in the future, I would actually just touch upon the 3 points. First is commitment. Yeah? There is commitment.
And commitment for what?
Commitment to use regulations for smart interventions to ensure usage, access, and quality of financial inclusion.
Sorry, what is the last one?
Usage, or access, usage, and quality of financial inclusion. And in many countries, we are very good at the access front. We have seen in many countries like Rwanda, we discussed this morning, we see 96%, but usage is obviously still an issue. And this is, I think, where also the fintech innovation comes in. So commitment is one, to create this enabling environment. The second one is to actually base what we do on data-driven approaches. I think even 10 years ago, when we were working with central banks, the data drive was not really there. I think today we are really looking for a data-first approach to regulation where actually both industry and regulators leverage on good data. And the third one is what we discussed earlier as well, is inclusive digital infrastructure. I think that's the third one. The third point I would like to mention, that what we could expect in the future with the objective to ensure inclusive innovation. So that's basically what I can say from the network's perspective.
So can I then bring Governor,
please,
mandate question back to you. Do you think mandate should be more explicit, where central bank governors or head of regulatory body will have part of the KPI, other than inflation targets, also deliver innovative financial ecosystem?
So that's a great question, because we had to discuss that last year with our board, as in we're doing a lot into financial sector development, financial inclusion, but it's not our mandate. So if we decided not to do it, no one would come and question.
Exactly.
So our mandate has always been price stability, financial stability, but we decided to at least in our mission expand it and say, why do we want price stability? Why do we want financial stability? Is to promote sustainable and inclusive growth. So now that it is in our mission and we're revisiting actually our law, we hope that that will be accepted at parliament level, is to say the reason why in an economy like ours, price stability is important, financial stability is important, because these are foundation, but for something bigger. And sustainability is also because, you know, we are at the receiving end of climate change and extreme weather events impact. So we need to invest in the capabilities of scenario analysis and so forth as central bank. Inclusion is also at the heart of what we do, because one could say, and sometimes we give an example at the central bank to say, if we only had one bank and 10 clients, financial stability would be achieved, right? But is it what we want as a country now? So you need really to have inclusion, I think, as a central bank in a developing economy at the heart of what you do. So we've experimenting with that change, but we think really central banks, and I really like, you know, even the theme of this panel is to say the changing role of regulators is because we want to contribute to growth. It's not in our mandate. Here, really, it's the Ministry of Finance.
Sure.
But without growth, whatever we do has no purpose.
Absolutely.
So I think that's really important to also challenge the traditional view of what a central bank is. But for that, it needs buy-in from the leadership. That's why it's really, in the end, comes out to what decisions we take as human beings. Technology might be there. We've seen, you know, bright young innovators, but are we listening to them and are we ready to support them? So it's really important, I think, as we probably discuss these issues of, it's not regulators versus innovators.
Yes.
We're all part of, as long as we share a common purpose, and I think that's what Rwanda has really understood, is we are in the same boat. Okay. A regulator that will say, you know, I have maybe met my inflation target, I have financial stability because I have only 2 financial institutions, you cannot be disconnected to what your population or citizens need. And then I know our parliament is holding us accountable on that.
I see.
And I think that's where it's also probably, even if you were a leader of a central bank in Rwanda and not buying into that, you will be held accountable so that you're forced to change your mindset in that.
Absolutely. Thanks. Now, Haocong, from your study across all, I think we discussed in the morning,
yes.
Is mandate important? Can you share your research? What does it say?
So I'll quote you. So mandate, you know, we have a current ongoing work. That's why we also talk to regulators, current regulators, former regulators, gurus in the industry, right? To see, because there's, first layer we say, policy making need to be contextualized, right? Every country is different. You have different size of market, the population, different purchasing power, GDP per capita, you know, the political dynamic, and then the business environment. Everything is different, right? So that's the idiosyncrasies, right, in each of the market. So if you ask if there are a playbook, we say, well, no, there's no playbook, right? But we did find that there's some common success factors. And then the mandate is the one that we were debating, right? So some of the authorities will have specific mandate, like Singapore, you mentioned, right? That makes your life much easier,
Absolutely.
right? If you say, well, I have financial sector development in my core mandate, so I have to deliver on that. I have to fulfill that KPI. But a lot of other countries, you don't have it. But going back to what Alfred said, sometimes you have a secondary mandate in terms of financial development. Sometimes you have efficiency competition mandate. So you can use that to promote innovation, right? Yeah, for example, Brazil is a case. They have a payment system efficiency mandate, right? So they set up a PIX, all the open finance framework, etc. So mandate to us is rather, we concluded sort of it's good to have.
So Haocong, I don't want to miss very important point. The competition mandate, is it an effective tool?
Competition mandate is what?
Is it an effective tool for fostering startup?
It is, absolutely. Yeah, I think so. Yeah, because you necessarily, because of it's because of the market dynamic, right? When you approach regulatory supervisory framework, you need to consider the interests of the incumbents and the interests of the disruptors, right?
I see.
So no, I want to make one important comment, then I'll give it back to you. For the regulators, the role is, because we have a competition authority, we have a financial sector authorities. Some financial sector authorities have explicit competition mandate. Some of them don't, right? But then if you look at the market, it's almost implicit if you have to have that competition lens. I borrow someone else's term from Gates Foundation, our counterpart we work with, right? So that competition lens means, you have to minimum ensuring market contestability. That's about the entry requirement, entry exit, right? And then second is a level playing field.
Sure.
So, that's the basic. The other point is, if we rely on competition authority to kick in, it's usually antitrust or competition enforcement, right? That's more of ex post. So financial sector authority do have that discretionary power to do it ex ante, right?
So Alfred, you seem to, you kind of expressed in a way when she said competition mandate. You have a different view, or you believe competition mandate works as effective tool?
Oh, sorry. I would agree on what Haocong said. For us, we do see that competition becomes more and more crucial for us, even within the central bank community. That's why we have now actually started a work stream within AFI, where we in fact discuss competition policy in the context of open finance, open banking.
Yes.
But of course the mandate, as you said, may lie with other authorities. But we do put a lot of emphasis now on actually looking at what are the pillars in an open finance framework, and of course competition is a very important one there. So we very much agree. But I do not want to go away from the mandate question without clarifying, again referring to you. We have found, others may see it differently, that the mandate question, how it is defined, is not so much the issue. The question for us is whether we do see that inclusion contributes to stability. Sure. And if that's the case, and if we accept that, then many things can be done. I can tell you that in the network, we have more than 60 countries that have actually issued, some of them even the second or third version of their financial inclusion strategy, a national strategy, and they're all central banks.
Sure.
And only 11 of our members have inclusion specifically in their mandate. So you can see that a lot of things are possible even without changing the mandate.
Okay, now we have a little less over 10 minutes. I'll have two quick questions to get through this next 10 minutes. There's a role central banks are playing in actually investing on market infrastructure to promote innovation for startups. To me, that's a huge, huge commitment where central banks is finding capital to put digital public infrastructure. So startups have a field of level playing field with the banks. What is the role of regulators, and how you think regulators can actually find the right capital to invest on market infrastructure so they create a level playing field for startups to compete with the bank? quick response, Governor.
No, I think for us, it's been easier because one, when we looked at sort of success stories, especially in the instant payment system, where you have to have a DPI where everyone connects, fintechs, banks, and so forth. And then it so happens that as we were looking at those examples being, you know, Singapore, India, even Brazil with PIX, is that a government-owned entity was already putting that. So we were already sort of assured that even without us, of course, we are becoming shareholders of that entity, that, you know, what we want to achieve will be done because it's a DPI that's being put in place. There's still a lot of discussions with the players on you know, let's say the business side of it, the fees and charge, but at least all agreeing on that principle.
So
that
the central bank should invest in public infrastructure.
We believe that's the way to go. And the success stories, at least on the instant payment side, shows that the central bank should do it.
Alfred, quick comment on that?
Similar, just very briefly agree, digital ID systems, instant payment system, it's an investment.
It's a commitment, huge investment.
Yeah, and I can tell that for some countries, difficult to lift. For other countries, and we are always referring back to the same examples, the 3 big countries, not an issue, obviously, or political will behind. That's different. And I think we also need to see, and I think you said it, one size doesn't fit all. We have seen that we also need to contextualize all this to the country conditions, and especially in Africa, as far as I know, we have a huge diversity of banking sector history and legacy, and I think we also need to take this into account when we. But in principle, I fully agree also with what Governor said.
Your response?
Well, I think we use 2 terms to describe the DPI, right? It's foundational, it's catalytic, right? So it's definitely investment, but you know, from a public good point of view, it's definitely essential. Now, whether it's the central bank's role to do it, for example, digital ID, the infrastructure may not be the central bank, right? So, you know, in this environment, we also emphasize, you know, definitely fast payment is in the central bank core.
My question was a little different. My question was, because central bank invested on a platform like payment system or a data infrastructure, there's no secondary, it's almost a verified data set. If a central bank doesn't invest on infrastructure, then some procedural friction comes into place. From that perspective.
From the data sharing perspective?
Where the infrastructure owned by central bank, so I don't need a second verification on the infrastructure's outcome, which can cause a friction if it's done by private sector.
With the privacy. Well, I think if I get your point right, because the friction is basically you're in a new environment where you operate, you have financial sector authorities, you may have data governance, you may have ICT authorities. So, you know, in that environment, you definitely need to build sort of a coordination mechanism, how to view the relationship with other regulators and key stakeholders in the system. And then there's also your perimeter, right? We say regulatory perimeter, but it also is about, you know, what are the core central bank activities. I don't think there's a straight answer. And you see in different countries, you have a different view, right? For example, data sharing. Sometimes it could be built on the e-government framework, right? Coming out of a treasury, for example. In some countries, because central bank has that core capacity, and you have that dominant use cases, right, in financial sector, whether it's you know, ID authentication, customer due diligence, or you have other application like open finance, right? So in certain countries, the central bank will take that prominent role, and of course, it's take a little bit of courage, right, to stick, you know, as a central bank governor, to stick your head out, you know, to manage that relationship.
Fair point. Now, last question. It's a great story if the Central Bank of Rwanda does everything perfect for the startup, but when it comes to cross-border partnership, there's almost a friction, because harmonization of policies, framework for startups is crucial, because no startup can grow just working on a domestic market. They must operate in multiple markets. So there is a point to which good virtues will run out of any value unless multiple regulators, multiple governors, central bank governors across multiple countries share the same view. Cross-border, you've done a passporting with Ghana, which was announced, is a great example. Your quick views on creating a harmonization of similar policies across multiple markets.
First of all, maybe let me correct. We haven't yet done the perfect way of supporting startups. I think if we did,
and you started with
we
Ghana.
started with one on the regulatory sandbox, but I wish we would have more of the fintechs that would graduate from the sandbox. But the passporting, as you mentioned, on the cross-border side, it's not easy because you need to really sort of have that assurance from different financial regulators. Even at ESC level, East African community, we're still struggling with, accepting the principle of licensing passporting.
Why, give me one of the example where you struggle. One example.
So I think even now, we have regional banking groups that work in our 6-7 jurisdiction, but each of them, each subsidiary had to apply for a banking license.
Yes.
Same for fintechs. But to be quite honest, I think all the criteria that we require are similar. But there's that, I think, step that we have to go ahead.
Trust issue?
Trust issue, but probably also we need some pioneers that do it, and we see that there's no risks, and then the others will piggyback on it. So I'm hoping that with this first example on licensing passporting for payment service providers between Rwanda and Ghana opens doors for other countries also to join and do it.
Alfred, passporting?
No, absolutely agreeable for us. I think these partnerships are moving forward. There's also the Nigeria-Egypt fintech bridge that has been opened up for fintech collaboration between the two countries. I think there's more to come. We are aware of some of the recent developments in the Southern African region. So I think this is definitely the way to go. We would very much like to learn from this as well. But I wanted maybe to finalize this just by one statement, and I think you asked me about the optimism. I think what we are discussing here in this context, as you said, Governor, would have been different perhaps a couple of years ago. It is because the young people today are exposed to these vast technological developments, different than when we grew up. And I think we need to see that these people are the regulators of tomorrow.
Thank you.
What will that mean in 10 years from now? And what will it require to ensure a safe and sound financial system that actually enables full financial inclusion? That's an interesting question, and here I'm quite optimistic.
Thank you.
Passporting, I mean, in principle, of course, it's good to have, right? Especially if you look at the African continent, other than the big four, those markets, even if it's painful, investors, startup will say it's worth it, right? For other smaller markets, it's really, you have to do it one by one, each of them. You cannot achieve scale, right? So that's really important in terms of startups scaling. But then you ask how to do it, that's another matter, right? As Soraya mentioned, you want to have that assurance as a regulator for sure. To put it plainly, earlier we joke about it. I don't want the bad apple from another market to come into my market, right, and create a problem. So I think, to do it, you have to create some kind of harmonization first. And you also need to look at the underlying, right? Each market is also different, whether you have that condition in terms of passporting.
Well, we have come to the end of the show, but I think I'll have to give the last word to the newly appointed governor. How does IFF going to help startups talk to the regulators? Is it a platform where every regulator will have opportunity to talk to the startups and find a common path?
No, I think probably let's also assume that IFF is a startup.
Okay.
And this is the second edition, and very successful, by the way. And we're happy as National Bank of Rwanda to be partnering. And so for me, I think starting this dialogue, but also, as I was sitting here, I wondered if it hadn't been IFF, would I have listened to both Wendy and David and taken the time in my calendar to listen to them?
Very
No.
good point.
No. So I think, yes, IFF is there to unlock that.